Hey everyone, John here from School of Trade. Today we're going to be taking a look at a fade off of the range highs, essentially telling the buyers, I don't believe you. This is a range day. We need to be looking to sell high and we need to be looking to buy low. So I am selling high right now at 84 and a quarter. My stop is going to go above the highs here and we'll put 3 up there. Now, in terms of the downside target, we're looking for a move back down to the lows. So I'm going to put 3 down there. Now, the overall movement that we're seeing right here, one thing to keep in mind, looking back a little bit here, the last time we were up at these highs, and now that we're back, we haven't really broken the high. We missed it by a tick. So that being said, I can anticipate the lows of this move to get missed by about a tick as well. So that means that instead of going to, 79, 75 or something like that, I want to go a little bit higher up here instead and say, well, if I know that they missed the high by a tick, they're probably going to miss a low by a tick, which is at 80. So I want to go above that up to 80.75. That way we're a little bit safer. We know that we have a better chance of getting the target filled, and it just makes a lot more sense. So our short entry right now, 84 and a quarter. We're short, just assuming that the buyers are failing, which is very obvious that they are. We can see the range formation and even a wedge. It really depends on how you drew this one up, but you can see both situations here. They try to break out of the highs, they fail. They try to break out of the lows, that fails as well. They get slammed to the highs, absolutely gargantuan bull candle, and that fails as well, right? We're not getting the follow through, and that's very indicative of a range. So seeing the buyers fail, I want to immediately switch gears and go into the sell side, and I'm looking to short this all the way back down to the range lows, where we will inevitably probably find a long down there once we get there. So right now, 84 and a quarter is the entry short, target down at 80.75. All right, so we've come one tick from our target a couple times now, so I want to make sure to reduce the risk just in case this, for whatever reason, doesn't want to actually go down and get our target. So what I'm going to do is we're going to lock the stop down. Now, I do want to give this some room here. I don't want to choke the trade out, but I want to make sure that I at least get something out of it. So I'm going to lock in at least a point. So that way we get a point out of the trade, but we're still giving the market a decent amount of room to wiggle around here. This is definitely the type of day where being on the safe side and giving it a little more room is usually going to be beneficial because, well, it's a range and you can see the candle formations are very back and forth. It goes bull, bear, maybe a couple bulls and then a couple bears right after. So that whippy nature that we're getting right now deems it almost necessary to give it a little bit more room to kind of get it out of its system. So beautiful follow through. We're getting the move that we were looking for. And now we just need to see the sellers step up to the plate and kind of finish the move. Worst case, we end the trade with a point on the final portion, but looking for that move to finish off at 80.75. We can see the sellers aggressively defending their positions here. Every time we've come up to this high area there at 82.50, it got slapped right back down, and there we get the target fill. Beautiful little pop through the lows there, and that finishes off the move for me. Now, keep in mind, this may go farther, right? You may have an equal move of this giant spike candle, but to the downside instead. If that is the case, then yeah, you definitely be looking to wait for a little bit of a bigger move instead of buying down at these lows like we have been over the past couple times we've reached these extremes. And that is definitely something to keep in mind going forward for today, but it is a range regardless, so we're looking to sell high and we're looking to buy low. Assume every breakout's going to be a failure because very much today that is the case. One of these will eventually break out, but I'm not going to be the one that tries to figure out which one that is. So beautiful sell off of the highs there, basically telling the buyers, yeah, good luck with that breakout move on that big bull candle. And we took it all the way back down to our targets, and just a gorgeous example of fading the range highs. So that's going to do it for me. If you have any questions about it, feel free to send an email to School of Trade. Don't forget to check out our trial at schooloftrade.com. And as always, we'll catch you next time.